Hello, everyone. Thank you so much for joining us again for our weekly wrap-up. My name is Jeremy Kronemeyer. I'm an operations manager for Wickham Financial Group, and I also have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, how'd the investment markets do last week?
Yeah, thank you, Jeremy. Thanks for our listeners being on the call. We saw the U.S. equity markets move a bit higher last week. We saw some key inflation gauge basically stay in line with expectations. So we saw the Nasdaq Composite up about 1.7%. We saw the S&P up about 1%, but we saw the Russell 2000 small cap really lead the show up about 3%. We saw 7 of the 11 S&P sectors all positive, but that was led by technology up about 2.5%, and the consumer discretionary gained about 2%. Outside of the indices, looking at cryptocurrency, that was up 23%, so we saw it up over 63,000 last week. Crude oil prices ended up rising about 4%. Why? Well, we saw the continuation that OPEC, or the anticipation that OPEC will continue their production cuts. If we look at U.S. Treasury yields, they eased a bit on the long end. If we looked at core PCE index, that rose about 0.4% month over month. That was about 2.8% year over year in January. Now, that's a key inflation figure that the Federal Reserve really prefers to look at, and that trended favorably for them. We had plenty of uncertainty around the path of interest rates as we saw the U.S. economy continue to strengthen, and that strengthening persisting at least for the foreseeable future. We saw fourth quarter gross domestic product was revised only slightly lower to 3.2 from 3.3%. And we saw the consumer, the U.S. consumer, continue to dip into that savings a bit for that spending that they continue to do. So we saw the personal savings rate was about 3.8% in January, but that was a full percentage point lower than it was just 6 months earlier. If we look at personal income, it unexpectedly jumped up about 1%. If we go into February and we're looking at the consumer confidence, that fell for the first time in 4 months. We saw the ISM, manufacturing, and the PMI slump to 7 months lows. And if we looked at new and pending home sales, they kind of lost momentum in January. Maybe we could hang our hat on maybe some cold weather, putting maybe a pause on that a little bit. If we kind of go overseas and let's look at some inflation, we're looking at Germany declined more than expected. It declined to about 2.5% year over year, but their CPI, at least in the 20-nation Eurozone, was somewhat higher than forecast, possibly put a little fear on what their central banks could be doing and what direction inflation would go. If we go over to China, the manufacturing activity continued to contract. Looking at Japan, their January core CPI gained slowed a bit from their prior month, but held at a central bank's target, I think, of about 2%. I think their target's about the same as what our Federal Reserve is looking to have it at. If we look at this week, we're looking at kind of inflation numbers really dominated the last couple of weeks, but I think we're going to get into some U.S. job numbers and kind of get a better picture of what's going on there. And that will give us maybe an idea of what the Fed's thinking about interest rates and their policy with those. We'll look at the ADP payroll numbers will come out. The JOLT job openings will be released on Wednesday. But I think most importantly, you're going to hear some two-day testimonial from the Chairman Powell with Congress about midweek. So that's always some fireworks that I know everyone's looking forward to listen to. But we've got some ISM service numbers, the PMI and manufacturing orders. They'll be coming out Tuesday. And then we'll get some consumer credit figures on Thursday and kind of wrap some things up with some retail numbers. We had Target come out today, Costco, Abercrombie & Fitch, just to name a few, Jeremy.
Got it. Well, I had a question for you, Graham. You were talking about earnings is kind of, for the most part, over with. And looking at the leaders from last year, do you see that those will continue to lead?
I think they're continue to be strong. Where they outperform all the other sectors? I don't know. I think there's a catch-up trade here, right? They led so much, so quick, so far, so fast in 23, kind of really led the market in 24. And I wouldn't be surprised surprised if we get a pause and get some of those other underperforming sectors start to move up a little bit, maybe that continuation of that broadening out. So I wouldn't be surprised if we get a pause at this particular point, but still high quality companies for the most part.
Gotcha. Well, we always appreciate the information. And again, thank you to everyone who joins us on the weekly wrap up. Check out our website. We do have our retirement planning today classes going on. We got our first one tonight. We do have some space available for the Saturday class coming up here on the 9th. So if you haven't signed up or you know somebody would want to come to that class, go check out our website, wickhamservices.com, and you can go check out the events and classes page, and you can get signed up right there. And we always appreciate you joining us. Thank you so much. See you next time.
Take care.